What's going on, guys? This is Aaron from Departures Capital, and we're here with Joseph Nakhla, CEO of Tribe Property Technologies. Always a pleasure to have you on, Joseph. How are you doing today?
I'm doing great, Aaron. How are you?
I'm excited to be talking to you about your recent quarterly results. So Tribe recently announced its second quarter results, where the company achieved record revenue. What's driving this revenue growth and your strong results?
Yeah, no, we're very fortunate. Again, we had our best quarter ever, almost more than $4.8 million of heavily recurring business for the quarter. What really drove that is a couple of main things. Number one is we're starting to see a significant amount of backlog of existing contracts that we had with developers that were building brand new communities actually come to fruition. So the delays we all experienced for different reasons, specifically in the construction and completion of condo projects, is actually now easing, and now we're starting to see all these projects come to fruition and our monthly recurring revenue kick in. So it's been a big area of our growth. And the other one is just organic growth, whereby a lot of people hear about us. We are now a fully national Canadian player. We are obviously a technology-backed services. We're very different than traditional property management companies, and we're getting a lot more brand recognition and demand on our services.
That's very important, especially in this industry. It's not an easy job. So you recently announced the acquisition of Meritus Group Management, which is Tribe's 12th acquisition. Tell us a bit more about Meritus.
Yeah, great company. We're very happy that we were able to reach an agreement to acquire Emeritus. Emeritus is a company that's been around for about 7 years. The principal there, Dean McCabe, is a fantastic entrepreneur, a fantastic person from the industry who understands how to deliver great service. For those that know enough about us, know that we've been looking for a great asset to acquire in the GTA market. That's an area that we had a lot of opportunity, especially with developers building brand new communities in that market. We wanted to have the boots on the ground and the footprint to support that demand that's available. And we connected with them. We worked through the due diligence, and we really like the asset and the entrepreneur and the people. So we went ahead, we concluded it. It gives us a great footprint, approximately almost 5,000 condos in the GTA market, with many contracts soon to come, but also gives us a great team that can really execute on the vision that we have.
Sounds like a great addition to your business. So the acquisition of Meritus gives Tribe a large presence in the Greater Toronto area. Like you said, how large is Tribe's footprint now in Canada, and how important is it for Tribe to be a national player?
Well, we're above 43,000 homes under management, representing, again, about 110,000 people living in our homes that we manage. Our footprint now spans over 8 different offices in the country, and we continue to be very active, and you'll see even further validation of that soon. The reason national footprint is important is because there's more and more REITs, and there's more and more property developments or real estate developments that are actually building in multiple markets. And we get the demand all the time. They're very happy with our services in Vancouver, but would love to have us in Toronto, or love to have us in Calgary, or whatever market we operate in. And that footprint now is really making us a lot more viable for a lot of the larger projects in the country. There's only 3 national players. 2 obviously are American companies, and we're the third one, the small engine that could. So we're very pleased with the work we've done, but I do think it's vital for us to be from coast to coast.
Definitely. So how does Tribe's pipeline look for onboarding new buildings and for new construction wins?
Busy. We've been incredibly busy. I'm so proud of the team and how hard they've worked to onboard these buildings. People have to understand, when we use the words onboard, it isn't just a sales cycle. It's once the agreement is signed, we essentially are the only company in North America that goes and digitizes these buildings and makes them ready for workflows, for payments, for all the future endeavors and projects that the building is gonna face. So it's actually quite a bit of heavy lifting for us to bring these buildings on board. Now, the reward of that is obviously we have a very, very healthy monthly recurring revenue, very sticky business, and we've illustrated even in our financials this quarter that we continue to show an additional ability to drive more revenue per home and more revenue per customer. So the heavy lifting in terms of the health of our pipeline is there. We're always hiring and expanding our footprint, and we're very pleased with our backlog.
So what are some future catalysts we can look forward to in the later half of 2023 and into the new year?
Well, you'll see us take more serious steps towards profitability now that the national footprint is there, and we're working on some really important projects to help us improve our gross margin. Our gross margin of the last quarter was much improved from the quarters before, and that's a function of us being able to deliver the service with a lot more digital tools. And then you also see us be very active in M&A. We're still, this is a part of our DNA as an organization. We do like to find great assets, acquire them with value, and put our technology in them. So you'll see constant improvement of gross margin, constant improvement of revenue, and constant improvement of activities around M&A.
Great. Well, thank you so much for all those updates, Joseph. Best of luck with everything, and we will definitely be having you back on for more updates as we have you on quite often.
Thank you, Aaron. I appreciate it.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.